The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing out there? Good Friday to you. And let's just do a quick market wrap, see where the markets are sitting at. We got the S&P down 3.5 points. We have the Russell down 5.5. We got the NASDAQ down 6.75 and the Dow down 39. And looking at oil, it's sort of doing its usual thing here. 50 cents up, 50 cents down. It's down 59 cents on the day right now. And it looks like it may be heading lower. And we got the euro dollar pretty stable, pretty flat from yesterday's close anyway. Down 12 pips right now, and pound dollar actually running up with 25 pips up. And then over on the gold market, we have gold up 370, and we have the corn down 475, and we got the soybeans up 1150. So corn, I think, is going to be breaking those highs soon. Drought's just looking worse and worse, and they are projecting a lot of price increase coming later in the year. The people we fill in there, in the restaurants and the grocery stores, and I think it's like 70-80% of the food that you consume at a grocery store actually has corn in it. So now they're doing all sorts of pushes right now to see if they can get the whole ethanol requirement removal, because they've actually found it has little to no impact on the actual quality of clean air on the fuel and everything else. And if you're just tuning in, make sure that you always can listen in, of course, at TFNN.com. You can check us out on Tiger TV over there and watch the live charts, and you can also listen in on your cell phone at TFNN.mobi. So from anywhere in the world. And if you have any questions during the show, feel free to give me a call. Give me a call here, Darrell Martin, and you can reach me at 877-927-6648. Or you can call in internationally from anywhere in the world at 727-445-1044. Again, the U.S. number there is 877-927-6648. And looks like we are getting some market movement a little bit on the downside there on the S&P. So we put a little trade on there. We're expecting the markets to do a pullback on the S&P 500 and to be at least below 1395, if not even lower. So I'm thinking 1392, 1391.75 is sort of my target for the S&P before the end of the day. And so we'll see how all that plays out. But we looked at earlier whenever we were on the binary hour, the Nadex hour there. We're looking at doing a short right around here. And, market's doing a little bit of movement and starting to move back down on the solid side there. But a pretty solid resistance level up at 1398.25. And, probably going to come down here about to this range. So looking at about 1392.75 as being a pretty easy target for it to hit. And maybe a little bit lower. I don't know how much lower it's going to go than that. It's just been a pretty quiet day. And if we go over and we just take a look real quick at what's up in the markets, we have, basically nothing else major coming out today. So besides, we have one thing that is coming out right, any minute now. And that's going to be the federal budget balance. And so they'll be releasing that information. And, right now they're expecting it to be $103 billion. So we'll see negative $103 billion. So basically what that is, that's the difference in the value between the government income and the spending during the previous month. And so the idea is they tried to pass the whole ceiling cap to last through the elections. And right now we'll see if they hit that. But I think there's a good chance they may actually exceed that number before the end of the year. And if they do so, then they're going to have to raise the balance again. We'll have a nice, Congress, showdown all over again. So next week, a couple things to keep in mind. There are no U.S. government news announcements that are happening on Monday. So that can lead to a quiet market or a steady, trend one way or the other. So just be ready for, more of a steady action on Monday, unless we have some crazy European announcement come out. On Wednesday of next week, be aware that the French and Italians, they're going to have a bank holiday. And so that, of course, is going to lead to the markets over there being closed, and that's going to lead to a little lighter trading volume on those days. So just keep that in mind. And, of course, we also have one of the cycles that we do have picking up, we talk about in diagnostic, is the seasonal cycles. We'll be having the payroll cycle right around that time as well. So with them closed down and the lighter trade volume that we're seeing, we should expect light trade volume really for the next couple weeks. Things start picking up after the Labor Day weekend there. And but we'll have some coming out just because of the the Jackson Hole Conference. Let's say Byron Nelson, the Jackson Hole Conference coming up here at the end of the month, and that's where all the big Fed guys get together and have their talks. And in between talks, they come out and they talk to the press. That'll cause some volatility. As far as next week, what else we got going on? There'll be some international reports, of course, as always. But here in the U.S., to take a quick look at just what else is happening. Again, make sure you're aware that Wednesday. No European, as far as French and Italian markets go, they'll be closed down. But we got several things happening. We're going to have on Tuesday we will have the core retail sales, and the retail sales number. Those are the big numbers out of all the numbers they released there. The PPI will be coming out, and the core retail sales, that really focuses down on basically without the autos. So basically not including automobile sales, and they do, the automobile sales count for about usually 20% around the retail sales. So, and they can distort the numbers. So they actually have one without the autos. And then we'll have the retail sale total number, which will actually include the autos. And both of those are going to come out at the exact same time. And a lot of the uptick that we've been seeing a little bit has been part of that's been based on auto sales and auto hiring. They haven't slowed their plants down, but we have had, just a sort of a downtick right there on the auto sales most recently. And so you want to keep your eye on that number as it has went down the last couple times it's been reported. And it's reported pretty regularly every month, and about 14 days after the month ends. So that'll be right on track on the August 14th. And then if we go in and we look at what other announcements we have coming up next week, we're going to be looking at the got the core PPI, not as big of a number, but the PPI, that's going to be the big number to be looking at. And the PPI, it's basically it's that big leading indicator of consumer inflation. And but as we all know, they don't really factor in the stuff that matters most whenever they're looking at inflation, not looking at things like food and energies and everything else. And then again, so that's 7:30 Tuesday, so expect that to kick some things off. And then we'll have the core CPI, and that's where they're going to look at actually food and energy. So, and that's consumer prices. So that to me, is a very important number. But even though they account for about a quarter of the actual inflation note, the CPI actually does not include the food and energy on the underlying CPI number. So just it's one of those things you got to look up the announcements, know what they're about. And then we'll have building permits. We'll see, how many new houses are being built on Thursday, and that also comes out early in the morning. When I say 7:30, I mean Central Time. So just calculate that to whatever your time zone is, 8:30 Eastern there. And then we got our regular Thursday unemployment claims coming out on Thursday, and then a little later in the day we'll have the Philly Fed Manufacturing Index. And basically what they do is they survey a couple hundred, I think that's like 250 manufacturers, and they talk to them about basically what they're looking at on their relative general business conditions and how they think things are going, on how that's going to impact their spending, their hiring, and their investments, and growing their business. And then we'll end off the week next week with the preliminary University of Michigan Consumer Sentiment Report. Just how do people react? They take a poll of 500 people and ask them to basically what's their level of current future economic outlook conditions. And so that does definitely have an impact. So that'll be sort of our nice Friday trade going on. That's 8:55 Central, 9:55 Eastern. So that will give us a nice little impact. That'll basically be the last thing we're going to hear next Friday as far as scheduled announcements go. And just keep that one sort of in your back pocket there. Be aware of that we actually may have a little bit of a move on that one. But after that, you got anywhere from 10 minutes to an hour. And you'll have the big impact in the first 10 minutes, and then you'll see the sort of general market trend. But overall, we're looking at a pretty quiet week next week on the government news announcement side, absent any big shocks in the market. And just taking a look at several markets, the big mover of the day, really natural gas. This thing has just been trending like crazy. And it flew up this morning after the market opened. You see this right there, and then it just flew right back down. Just a perfect trend reversal. And so, hopefully you're able to catch some of that. And if you're looking at natural gas, and it really is usually more bullish going into October, just on the seasonal cycle. But it's been down the last really couple of days, hasn't done a whole lot, and we've had some oscillations over a few days there. But looking at a week back, we were up at 250. Now we're down at 795. So we'll see how the long-term trend goes. If it stays with that seasonal cycle, we'll keep you up to date on it and see where it's moving step by step. And over on the euro dollar, we did have a bit of a pullback there this morning, but it is starting to let that go. And we have a target right around 22.40. And we put on a binary order today, earlier in this morning, sort of shooting for anything below 22.60 with a $5 risk. And if it does work out, then we'll make $95 on the trade per binary. So if the thing closes out. And so we'll pull that up, see where that trade's at right now and what you could do if you want to take advantage of it still. And I hope things are going well for you. And again, if you have any questions, just give us a call. You can reach us again at 877-927-6648. Now, if you don't have a Nadex account, and that's one of the big things we talk about, then what you'll want to do is you're going to want to go over to tfnn.com. And right there on the homepage on the right side, you're going to see the Nadex banner. Click on that banner, and then you can click on Create Account. And if you click Create Account, you can do a live account or a demo account. For a live account, you only need $100 to open an account. And so, that's okay to get started. And you actually can start trading right away. And there's $5 trades, $10 trades, $20 trades. If you're really serious and once you decide that you actually want to start doing this and getting into it, I recommend having a couple grand put into your account. So that way you can balance out your trades. You can really be doing some risk-reward analysis, and not just risk-reward analysis, but, risk management based on 1% of your account or something like that. So that way, you can gauge your trades and have consistency in your trade size. And, 2% is sort of the big rule. Sometimes people go more when they have smaller accounts when they're starting out. But eventually you want to get into that 1% level where you're not risking more than 1% of your total accounts. And, it's even nicer if you can make it 1% of the specific account. But, maybe you have $5 grand in the futures account, you have $1 grand over there. You may want to look at having a total of $6,000, just depending upon if you're hedging or not. We talk about that trade quite a bit, the hedge trade. And or you can do the hedge trade we talked about yesterday, which is where you hedge Nadex versus Nadex. And if you don't want to fund a live account yet, or if you want to just try it out before you get going, again, I do recommend the live account. You'll get more accurate information on there. But if you go into the demo account, you can see what it's all about, exactly how it works. Just click on Open a Demo Account and put in your username, your first name, your last name, your phone number, and your email address. Hit Apply for Demo. Seconds later, you're going to get an email from them, and that email is going to include your password. And if there's an O in the password, it's a 0. It's not the letter O, okay? And then you'll be able to log in. So literally it takes 15 seconds to get a demo account. And probably takes, a matter of minutes to get a live account. And if you do decide to fund your live account, then they'll actually, if you go in and do the e-check deposit where they just, pull the $250 out or, $500, whatever, they'll actually give you up to a $250 credit right away while they're waiting on the e-check to clear. And so that's a nice benefit, so you're not waiting. You can start trading it right away. So when you come back, we'll take a look at the markets, and we'll go into a little more detail on some of the trades we're looking at inside the Nadex platform. Hold it right there, folks. We'll be right back after the commercial break.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit tfnn.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome back to the Diagnostic Trading Hour here with Darrell Martin. And we were going over a few things when we last left. Just to let you know, you can call in at 877-927-6648. And we were talking about Nadex and looking at some trading opportunities as they're setting up. So if you go right over here to Nadex, then you can log in. As soon as you log in, you'll see all the markets that are available. And you can resize the windows, make them mix and match however you want to there. And so let me pull up some information for you. And you'll be able to see, let's see here. Grab this. And got another short signal going on over here on the euro dollar, where we're looking at going short. And so, just what are some possible plays that you could do with that? One of the plays we were looking at is if we're expecting to move down to, 2240 or so, is we can go and we can look at the binaries. So you go to Forex binaries, you go to euro dollar, and you click on, you can choose any one you want. So whether you want to be daily or weekly, so we're looking at daily. And we can look and we can find the 2260. You can also come over and you can look at weekly and see which ones appear that most attractive to you for the trade setups that you're thinking about doing. And let me refresh my screen there and pull it out. There we go. And so Forex binary is euro dollar. And again, you got the weeklies as well that you could look at possibly taking advantage of. So if you're thinking, if the market is going to actually pull back to 2260 here, now this is in the next basically hour and a half. These expire at 3 o'clock, and they've been trading for quite a while. Then you can go in and find the ones that best meet your criteria. So right here's a 2275 one that you can take advantage of. And on this one, you can go in and for $12 and or $11.50, you could place a trade if it falls down, literally just about 20, 25 pips from where it's at right now. Then you have $11 risk, $88 reward if it expires under that level. On the dailies, you can go over and you can check out the binaries. You can look at the 2260s, and you can check out a trade right there. Right now it's at 97.50, which means your risk is going to be really low if it does get down to that level, and only putting you at a small risk of $2.50 for a $97 profit potential. So if you are looking at that trade, you want to take advantage of it, those would be a couple ways to do it. You also have the option to go in and look at the spreads. So if we want to look at the spreads, you're going to go Forex Bull Spreads. Just pull that up right there on your screen, and you'll be able to see the Forex Bull Spread, so that way you can take advantage of that. And what I like to do is I like to compare the different spreads to see which ones have really the best risk-reward potential out of everything that's available. But if we go in and you're just pulling them up, and let's say you're looking at euro-dollar, probably going to want to look at the 250s right here or the 100s. So if we look at the 250s, and again, you always want to find one that's going to be close to the floor ceiling. So right now, with everything quoting at 22.96, you got to see if you can find one that you're comfortable with. So right here, you got this one at 23.95. That's too high. 25.20. That is too high for the risk reward. If you go and you try to do that trade, then you'll be looking at not a good trade. So if we go down another level, look at that trade, 103 to 147, still not that great. Go down here on the 22.70. Problem is we're pretty far out of the money on that one. On that one, you'd have a $3 risk, but you'd have a $247 profit potential, but it has to drop all the way to 2020. Really don't see that happening today. So I think you're better off, honestly, going over with the binaries versus this spread right here. So now we can also go over and we can look at some, narrower spreads and see if we see anything that, looks like it might be a little more appealing. And, we got the 2350s. That might actually work out a little bit better. Even the 2300s might even be more ideal. So on the 2300s, if it goes down below 2289, then you're at break even. Every tick below that is going to be money in your pocket. So, again, with the setups, you always want to check the spreads, look at a couple different spreads, and also look at the binary, see which one is going to be the best setup for you today. And if we go back and we look over at our charts over on the S&P 500 right now, just sort of see, it did do definitely a full tick down there, move down, but it's just still pretty flat. So we're on at 13.95 short. We'll see how the trade ends up by the end of the day. We have till 4:15 Eastern time to see where that one ends out for us. And if we get down here to this level, we just got to break this, and it's oscillating right here between these two levels of 13.98 and down here to 13.95. So if we can break that level, that 13.95 level, then we ought to see at least a few more points picked up on that. And every 3 points, if you're doing 5 contracts, you're going to have a $150 profit on that trade. And when we put the trade on, we had basically about a $50 risk per spread. So we'll see how that comes out on the trades, and keep you informed. And if you're in the Tiger's Den, then of course we'll go in. We post the information on that as well. But you already watched that trade this morning as we placed it. So one of the things I like to look at is to go, what is the expected standard deviation move? And so what we're going to do is we're going to take a look at some of the moves just for today, which are obviously pretty small. Just being, one, it's a Friday, 2, it's a summer day. So, we got that summer low going on. So when we come back, we'll check out the expected standard deviation moves on euro dollar and on the US 500. We'll also check it out on natural gas. All right, stay right there, folks, and we'll look at it and see how they play out.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour here with Darrell Martin. So we're going to see where these stocks end up by the end of the day. Let's go ahead and check out some standard deviation levels, see if they might be helpful as you're trading right now. And sort of what's looking right there. So I'm pulling everything up right now and going in and looking at one standard deviation level. I'm going to be pulling it up on 3, probably 4, maybe 4 markets total. And right now I'm going to be pulling up the S&P 500. I'm also going to be pulling up natural gas. And I'll be looking at the euro dollar. And we may go ahead and pull out oil as well. Oil has really done a great job lately of just sticking to those standard deviation levels. And so you can use that in your trading. And so if I go in and let's see here, let me pull up natural gas and give you what the standard deviation level is. That's the last one I got to pull up. And let's see here. So we got 2.93 minus 2.787. All right. So let's just step through and look at each one of them. And when you have lower volatility days, sometimes you're going to use half a standard deviation. But sometimes you use a full, and every once in a while when things are going crazy, you're going to use 3 or 4 standard deviations. But you can see we just had a whole lot of nothing going on over here on the S&P 500. And so just oscillating up and down. Hopefully we can get that down below 1395 by the end of the day. But we go in and just looking at yesterday's market movement, the high level on the standard deviation is 14 points. So it's actually pretty high for going in. And so that'd move it all the way up to 1404.25, and I'd probably cut that in half, just being a Friday with nothing going on. So if we go in and we add in, say 7 points to the 1390 level, then we're right at 1397.25, which is where we're quoting at the moment. Okay, so that being the case, 1397.25, and that basically we're at that standard deviation level, and it's just been hanging out right there. And what we want to do is we want to look at, okay, how far do we think it could go down if we actually did this trade? So what we want to do is we want to look at the high. So always check out the high price there. And so, looking at the high, let's see here. We got a high right now. Let's see if it'll let me do it. All right. We got a high of $13.99. So if I go in and I take $13.99 and I take off 7 points, then that puts us literally right at $13.92 as the low move of a half standard deviation move back off. So, we may hit that level. Again, we got to break this 13.95 level. If we can break below this 13.95 level, then we're probably looking at a few more points right there. And there's a variety of different trades that you can do on the Natix platform. You got spreads, you got binaries, you got a lot of different things that you can take advantage of. But if we're looking over at, say, the spreads like we're looking at this morning, then you can go in, you go to Indices Bull Spreads, pull up US 500, and then you're going to look at, basically what's going to be closest to where the market's at right now. So we're either going to check out, there's a couple different trades. We can check out like the dailies, and they're at 1,400. And so if we go in, we decide to sell this one right here, okay, then we're going to have we'll actually have some real value inside that trade, some, intrinsic value. And we sold it earlier at 50. It's at 40 right now, so we're down about $10 a spread. But again, we have until the end of the trading day to be right on that. And so if you got in on this trade right now, you'd be looking at a 13.96 entry. So you need the market to basically close below 13.96 in order for you to profit. But you don't lose everything. And that's one of the things people sort of, they get confused. They combine binaries and spreads, and they think they're the same product. They're completely different products. And so, for instance, if the ceiling is up at 1,400, then you're actually going to lose, like you actually would get some of your money back anywhere it's at between there. So let's say it expires at $13.97. You'd get $30 back. If it expires at $13.98, you get $20 back per spread. If it expires at $13.99, then you're going to get $10 back per spread. So unlike the binaries where it has to finish below that at expiration, now you can close it before it, but at expiration it has to close below your price or it's a total loss. The spreads don't have that total loss going on unless it expires like above your ceiling. So it'd be like your stop loss. So if you're going short the S&P, 1,400 might be like where you'd set your stop loss right now. And if you did that, that'd be like having a 4-point stop loss at the moment. And so just looking at where the S&P's at, 4 points, it actually put it up for the same risk. The S&P got up to 1401, then that's where you'd be looking at. So we're actually having a little tighter stop, a little less risk, and like I said, all we have to do is get a little bit of movement down. We got to break below this, so we'll see if we can get that happening. But we probably are looking at a profit, somewhere around 1392, 1393. And so if you do have contracts in on that, I would suggest taking at least a partial profit at that level. So let's say you have on, 6 contracts, taking off 3. If you have on 5 because you evened it out, you may still want to take off 2 or 3 contracts just to lock in some of your profits and, take advantage of that because it may come down here and just touch it and go back up, or it may just, and if it does continue to run, that's the nice thing about taking off part versus all is if it keeps going, you get to ride it. And, again, we don't expect big moves today. So a lot of times when we're doing all this, we're looking at the, bigger possibilities and the bigger moves. So right here, if we pull up our euro-dollar chart and check that out on the standard deviation levels, then what you're going to do is you're going to go, okay, how big is the standard deviation? Well, one full standard deviation on the euro-dollar right now is 116 pips. And so obviously we're not looking at fully hitting that, but if we go to look at the close of yesterday, which is 1.2915, and I'm just looking at, basically the spot close there. So 1.2915, and I go in and I add, all right, 116 pips, so 0.0116, then that's going to put me up at 1.3031. And so if I go in and I look at, okay, so what's the high over here? Then we're getting 322. So pretty close right there. I mean, only 10 pips away. And again, now that's on the spot or that's on the futures market. I could also go in and I'll just pull this up real quick. Our high looks like on the day on the spot market is actually going up to 1.2315. So we're right on the money on doing that. I mean, literally 5 ticks away. And so looking for, a drawdown, how much could you expect to go down? Well, it could go back all the way down to 1.2915. I'm not really expecting that to happen today. So what you got to do is go, okay, well, how far do I expect it to move? So let's say we got a 50% retracement on that level. Then you just look at, okay, well, what is the high And so we go and we pull our, our high mark out. We got our high of 1.2322 on just looking at 60 futures there. So 1.2322, and I'm going to take this up, 1.2322. I'm going to take half. So instead of 116, I'm going to look at 58. So that's where the pullback I'm going to be looking at. So minus 0.0058, and that looks at a pullback of 1.2264. And we were talking about it going down to as low as 1.2240. So if you went over and you chose the binary, like we were talking about a minute ago, and you're looking at the weeklies, which expire today, and the nice thing is they actually do trade for a week, and so you can actually make a longer term trade with those. And we go over here, we'll pull it up and check it out again so you can see that exact trade setup. So if we do get down to 1.2264, what trades exist that you can take advantage of. So we want to be above that number, so 1.2275, and you can put that trade on right now for a profit of $89.50 on a risk of $10. So if you do 10 of those trades, that's $105 for a $895 profit. And by the way, 1 equals 1 mini lot on the spot market. Okay, so 1 euro-dollar spread equals that. And so if you're looking at doing 10, that'd be 10 of them. Now we're doing binaries. It's not quite the same, but the nice thing is if it closes at 2275 or lower, we'll make $895 on this trade. So I hit place order, boom, my order's filled right away, and now I can monitor my position and let it trade out and sort of see where things end up. So and you'll see again that there is a difference between the live and the demo platform, and you can see that if you sign up for both. And again, I do highly suggest that you sign up for both, just for nothing else, just so you can see the differences between the two. And so you can see those, live market prices versus this right here. Everybody has sort of the demo account going on. And so since people have the demo accounts and since you're placing trades against other traders in the demo platform, then, those prices can, look a little bit different. So if we go in like right now, this says like 190 by 200. Well, if you go into the live one, then you can see it's 200 by 200. So you're seeing a little bit more accurate action there on the prices. And you're also seeing like these bids and stuff going on. See, those aren't actually happening in the live market. So, but you can go in and, there's a lot of different ways that you can take, advantage of the trades and put them together. So that's how we take advantage of that if we want to trade the euro dollar. And got it right there. So, and it is been ticking down ever since it came right there off that high and started moving down. So we'll see if it keeps up that action. And another big mover of the day is we got natural gas. So we go in and let me pull up pardon me, natural gas there. And I'll zoom out a little bit. And it's really just been trickling down, all day long. And we were talking about this morning. I talked about, it just flew up yesterday, and then it started turning around, and it just continued on that downtrend all the way through the end of the day, and still going there. So what can you do to take advantage of natural gas on Nadex? So now you can trade the binaries and the bull spreads, and they're going to expire at 2:30 Eastern time. Okay, so and you had trades that you could have started a lot earlier, or trades that you could have started 2 hours ago. And so looking at that, looking at what our standard deviation levels and everything else, we're going to be blowing that out, I'm sure, pretty heavy. So let's check it out and see how it comes up. Looks like we have 143.143 tick standard deviation level, and off yesterday's close. And yesterday it did close out pretty high there. So let me see here. I want to grab the yesterday close just to make sure I get the right number. And that way we're looking at everything the same. I want to make sure we're looking at the September contract, by the way. This is really important. When you're trading Nadex, make sure your contract months line up, okay? So, for instance, let's say I was just looking at, natural gas right here. I do want to make sure that my contract month, so versus September, lines up to the future chart that I'm looking at. And so on that contract month, and we got a closeout of... let's see here, 1.2915. So 1.2915. And then if I go in and I'll just double check my standard deviation levels to see, like I said, what we may have that could work out for us on this trade. And I do want to make sure I'm looking at, even when I'm calculating my standard deviations, I want to make sure I'm looking at this September contract because it can be different. And on that standard deviation level, I got, let's see, 1.312. minus 1.2782. That's going to give me a pretty big standard deviation, possible 338 tick standard deviation. So now what I want to do is I want to pull up and not ticks, but just 3.0338, and I want to go, okay, so what did it close out at? It closed out at 1.2915. How low do I think it can go? Well, one standard deviation down would be 0.0338, and that put me down at 1.2577. So that's a big move, and again, it's a Friday. So on Fridays, I like to cut that number in half because we usually don't expect the same level of volatility. And so I'll go in and I'll take the exact same number, 1.2915, and then I'm going to take the 338. So you take 0.0338 divided by 2. So take half a standard deviation level and go, okay, with that, now what do I expect it to move down? Well, I expect it to move down 0.0169, and that puts me down to about 27.46. So we got a little bit left there. We're at 27.80, but that would be my profit target. That's where I'd be looking to take profit off. And if I was going to do a reversal, that's where I'd be looking to do one, but 27.46 being the goal. So seeing 27.46 as the goal, is there a lot that's going to exist? Now, again, we've already had a lot of the movement. So when you have a lot of the movement already, if you don't want to join the trade in too late, so we want to see, is there a good trade that we can take advantage of right now? And I'm expecting the market to move down to that level. So we got the 1.2746. I'll put that over here as our profit target goal. And, so if you got in earlier, then that would be definitely where you'd be looking at tightening everything up as we get closer to that. So I like right now be having a stop right here at 1.2821 and just throwing that down. But so we go over and we're going to look at the commodities bull spreads. We're going to take out natural gas, and we're going to go, okay, what do we have that's close to the price of 1.2782 right now? And let's see here. This is looking like the lowest one at the moment on the daily, and so I can check that. I can always pull it up and see what my risk reward 125 to 275, not bad, not necessarily, I wouldn't call it great. So that one's probably a little wider than I want. So I'm going to go a little bit wider down here and see if I can find something that's maybe better, 1.2900. That's going to be even more risk. So if you can't find a trade over on the spreads, you do have more reward potential, but you still have $126 risk on just one, and you're going to want to do 10 if you want to equalize a natural gas contract. Then I'm going to go down here and I'm going to look at my commodities binaries. And now I'm going to check out natural gas. And now I'm going to look at several different areas. I can look at this right here. That's going to be the short ones, the ones that expire at 1 o'clock Eastern. And saying below 1.2600. That's way below where I expect it to go. So I don't see that as being a high probability trade setup. So now I'm going to go over, I'm going to check out the dailies, see have we blown past all the levels. We have not blown past them yet. We do have some possible opportunities. So if we think we're going down to 2746, there is a 2780 that you can put on right now. If you did that one, you'd be looking at a $59 risk, $41 reward. Well, I want at least a 1-to-1, if not a 2-to-1 risk-reward ratio. So I'm probably going to avoid that trade. And then now I can go over and I can check out the weeklies and see if I can find one that might be just even closer. And I can see, I actually do see one, 27.50 right here. So I can go in on this trade. If I put that trade on, I have a $13 risk. I have an $87 reward potential. And so I'm going to go ahead and do 10 of those. It's a $130 risk, $870 potential. And that's if natural gas does get down at or below 27.50. So again, we'll go ahead and place that trade on there. And if we do get to that level, then we're basically right below the standard deviation mark of where we'd expect natural gas to pull down to today. And we'll take off probably half of that at the standard deviation level. So at 27.50, I'd recommend taking off half. So put an order in to buy back. We'll pull that up whenever we come back from the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this prospectus and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, welcome back to the Diagnostic Trading Hour. And we did a quick summary. We ran through Eurodollar, we ran through the S&P 500, and we looked at natural gas last. Let's go ahead and wrap up with oil. So oil right now, I'm going to go ahead and pull the numbers up for you so you can see what the expectations are for the remainder of the day here, through the remainder of the pit hours. And we got, let's see, let me pull up this, and I'll have the last little bit for you. All right. So on oil, if we pull it up, basically closed out at 92.75 there, and what I'll do is I will open up the chart, bring it on the screen, so you can follow along with what we're talking about, what we're looking at. And you can see we had, pretty good little move down earlier in the day. Started pulling back here, and then just went on down for the rest of the day. And so right there, we see that now. Oil closed at 93.54 yesterday. And again, half standard deviation moves on Fridays unless we got some big announcement, like unemployment rate and stuff going on. But if it's just your regular, everyday news thing going on like we had today, then we're going to be looking at the half standard deviation move. And which would put us down right at 92.21. And so, we did obviously break that window down to 91.69. And if you did, the pullback up, we had the market climb up to 93.20. So now let's pull off a half standard deviation move. That's $1.32. So $1.32 down from the high right now of 93.20 would put us at 91.87. So we're looking for, a potential good solid 50-cent move down before we finish the day off. So we want to be, making sure we're looking at that and pulling everything up. And I just want to, like I said, I always like to double check, pull everything together. And again, we had that high. Actually, the high was 93.20 on the day. So again, I want to make sure I'm looking at the September futures contract. So that way we're lining up with the Nadex platform. So 93.20, and then we do a minus, okay, 1.3215. That puts us down to 91.87. And our low, as we can see right here, was, let's say, at 92.21. So didn't quite even reach the low before we did that little bit of a bounce back. We got that bounce back. It came up to 92.37. And so we're going to see how everything, ends up on the day. But I think that we have a good possibility of a solid 50-cent move down from where we were at there just a few minutes ago. And again, that 50-cent move total would put us down at 92.21. So right there, basically at the low of the day. And is what we'd be expecting. So if we want to look at a short-term move, now again, that's not going to be too much more of a move for us left off. But you could do quite a few different trades with that on the Nadex platform. And just go over and again pull in your Nadex charts there and pull up. You go to commodities and you go to either bull spreads or binaries. So if we go to bull spreads, we check that out and we look at where it's currently trading at. It's currently trading at 92.32. And let's see here. So we're going to go right here and September contract again. And so what do we have that's close? We got 92. That's going to be too high. We got 93.50. That's going to be probably too high as well. Let's check out the dailies. And we got 93. That might work. It's still a little higher than I like. So if I don't like the spreads, which are my favorite way to trade, but if I don't like them, then I'll go over and then next I'll look at the binaries. And I'll see if there's something that's sitting there that just stands out for me. And, there are going to be a few trades you can check out. Again, going down just, 20, 30 more cents. And so you can check those out. We got a $92 one that would actually probably be a pretty good trade for you to do. And anyway, so check those out. And pulled up here, we got the $75 one. And that's a $25 risk, $75 reward if it closes below 92. And do a quick market wrap for you. And we'll be seeing you next week. So make sure you tune in every day 12 to 1. And market summary, we got the S&P down 2. We got the Russell down 3. We got gold up 3, and we got oil down 1. So everybody have a great weekend. We'll see you next week from 1 to 2 Eastern Time, 12 to 1 Central on the Diagnostic Trading Hour here with Darrell Martin. Stay tuned. We got some great shows left for you to close out this Friday.